All right, welcome to Wealth Pack today. So, what we're going to be talking about today is credit. So, the first thing we're going to talk about what is credit. Next, we'll talk about what makes your credit score. And lastly, we'll be talking about what do you need credit for. So, there's three different things that a lot of people get misunderstood. So, first off, we'll start with what is credit. So, right now, just with the credit score that you have, could you buy your dream car right now? Obviously, leave that in the comments below. Yes or no, let me know, and that lets me know, who I need to target in my next video. So, a dream car that I really don't like blue, but I'll take this in red. I don't even know what kind of car that is, but it's pretty nice. So, the credit score, as far as the number, it starts 850 and goes all the way down. So this gives you an idea of what's excellent, good, very good, fair, poor, kind of the different price ranges. So there's three credit bureaus. The first one being Equifax, next one Experian, next one's TransUnion. So all of these shoot out credit score numbers to credit. I'm sorry, the three different credit bureaus, and they'll shoot out numbers to make your FICO score. So that's how they're made up. So this is kind of the national average 692. So go ahead, look at your state, see how you match up. I know right now I'm in Arizona, 680, so I'm actually at like a 760, 760, so I'm doing pretty good. But yeah, definitely by states. Do not worry if you are below that. That's my job, is to help you. So go ahead, follow along, like this video, and so you see more content, and we'll get your credit score up. Okay, so what makes your credit score? So 35% is going to be your payment history. So payment history goes back 7 years. So that one late payment will affect you for 7 years. So definitely do not be late. Even if you have to make the minimum payment, do not be late. If you are late, go ahead and call them and say, hey, I forgot. Is there any way that you could take this off of my credit? Make sure it doesn't get reported as a late. Usually they'll waive the fee, take it off, and nothing will happen. But if you do it too many times, they'll stop doing that. So definitely be on time with those. Even if you guys set reminders in your phone or set on automatic payment, do what you need to do to make sure those get paid on time. The next one is 30%, which is outstanding debt. So this is where you hear people talk about keep your balances under 30% on your credit cards. Your revolving balances, which are credit cards or home equity lines, keep those under 30%, and then you'll get a positive review. So for example, if you have $10,000 credit card, you want to keep it under $3,000 monthly. Ideally, you want to keep it under zero and not have any credit card debt as the goal, but you got to start somewhere. So we'll get into that later on in regards to how to use debt effectively to boost your credit, as well as you know get points and referrals and stuff like that. So next, for 15%, we got credit history length. So if you're new to credit, if you're early 20s, late teens, started at 18, your history, it's just not gonna happen. It's not gonna benefit you because you don't have that 7 years in place just yet. Mm, Hang on, let me go ahead and get this off. Sorry about that. Oh, we're losing you. Okay, sorry about that. So credit history length. So like I said, with the late payments, you want to make sure that those are on time. History length. So if you open up a new credit card, it will take a ding for a little bit, but as soon as you start making those payments and get them knocked out or leave it at zero balance, it's already going to start accruing. Also, if you have credit cards that you do not use anymore, do not, I repeat, do not close those, because that's good credit history that you have. Even though they're paid off, you're not using them, is still building, helping with the credit history length. Yeah, it's only 15% of the makeup, but it does help. Say you have a late payment, that credit history length will help offset. Credit mix. So this is going to come down to what types of credits you have. So that is it a car payment? Do you have a mortgage? Now, some credit bureaus are taking rent, on time payment rent. as far as helping boost your credit in place of a mortgage. I already said credit. Let's see, secured lines of credit. So like secured credit cards, HELOCs, which is a home equity line of credit, and obviously credit cards. So those different types of credit are going to affect. So I can't remember where I read it, but they say you should have at least about 11 different lines of credit. So if whether that's 11 credit cards, if you don't have a house, or if you don't want a car payment, get 11 credit cards, throw a car payment on there, get 10 credit cards. People are like, well, that's a lot. That's, now they're saying have them, not use them. There's a difference between maxing them out and sitting on them and paying more monthly than you need to. That's just as far as having them available. So the last 10% is going to be pursuit of new credit. So this is inquiries. So you have two different types. You have a soft pull, which is a soft inquiry, and a hard pull, which is a hard inquiry. So soft pull would be like if you go to your cable company and they do a soft pull, are we going to charge you a deposit for taking, this new nice equipment, and we need it back? How likely are you going to pay, stuff like that. Same thing as goes for new cell phones. So if you get a new cell phone, a lot of them will do a soft pull in regards to, all right, are they didn't pay us back, are we gonna get our money's back worth, that whole buy one get one type deal. A lot of them pull your credit for stuff like that. So hard pulls are like when you're opening up a new line of credit. So if you're applying for a new credit card, if you're applying for a car loan, for a home loan, stuff like that, where they're then extending the line of credit. So if you wanted to up your credit card limit, stuff like that, they do a hard pull. And so, yeah, that does affect you. But once you reach a certain point, it'll affect you for like 1 month, if that. Now I'm at a point where, I'm about a 760. It took me a while to get here, but now when I open a new line of credit, I think it goes down like 4 points and then it's right back up more than that the next month. So different types. So that's what makes up your credit score. So next we'll talk about what do you need a credit score for. So there's a lot of different things that a lot of people don't realize. So the first one being a house. So a lot of people are like, oh, first time home buyer assistant programs, I can get into a house with a 580. What they don't tell you is how much more you're going to be paying with a credit score of 580. So ideally, when you're buying a house, you want to be at least, a 620, 680. If I come across people that are in that range, I try to get them to a 700, 720. Once you get that high, I mean, your interest rate drops dramatically. Next one is for credit cards, to get new credit cards. So we'll talk about this later on in some other videos, but credit cards, I mean, they're huge. The value, a lot of people want to travel, and this is a free way to travel. A lot of, Hilton's, Southwest, American Airlines, all these airlines, all these hotels have their own credit cards that give you points for using. So if you use it like a debit card in place of your debit card, now you're building points monthly, and then you could travel for a discount, if not free. So you want to have a good credit score for that, so they give you higher limits. And then thirdly, a car. So if you need a vehicle, same thing as with the home loan and the credit cards, you need a good credit score to get a good rate if you're going to buy a car. I'm a firm believer in no car payment. So, but if you would like that nice car, definitely get something with a lower interest rate that will help out monthly. A new one that is in regards to dealing with a car is car insurance. Car insurance companies are now pulling credit to offer better rates. This shows that you're responsible, you can pay things on time, and they want to reward you for that. I know for me, mine when I went through the process and my credit score jumped up 50 points. I called my insurance agent, and he was able to knock off $75 monthly, which is huge. $75 monthly for my car insurance. So that was pretty crazy to me. And then also, lastly, a lot of employers are now looking at credit scores. They're pulling credit scores, especially if you deal with money, with finance. They want to make sure that you're responsible, that you're not a lot of high risk to them. And if you're dealing with money, if you have, if say you're the owner of a business and they have to count money in cash, and somebody's on hard times and they got a low credit score and they got a lot of outstanding bills. I mean, do you really want them counting all your money, with the temptation to steal to pay off whatever they need to pay? Maybe they're paycheck to paycheck already. Unexpected bill came up, they're short on cash and they're handling cash. I mean, I'm not saying all people do that, but it's definitely in the eyes of an owner. You don't want somebody in that to put somebody in that situation. So they're pulling credits to, for candidates and jobs and stuff like that. So I know that was a lot. I covered a lot. I was trying to keep it short, probably about over 10 minutes, probably something like that. But yes, so share, like, subscribe to Wolfpack by Antone on Facebook. We're going to get an Instagram going here pretty shortly. So look out for that. Also, YouTube, we're coming to you. So once again, like and subscribe. Have a good day.